Nigel, I think we have the management of KPIT with us.
Well, that's right. Let's focus on that one then, the earnings reaction. KPIT is on our radar. Well, the last quarter's performance was a little bit subdued, but the management is optimistic on growth momentum in the second half of the year. Let's talk more about the past quarter's numbers. Mr. Sachin Tikekar, the joint MD, joins us on the show. Hi, sir. Good morning. Thanks a lot for joining in. Well, you're indicating the second half of the year will be good. But do you think quarter two as well, we are bracing for a bit of degrowth? And going that quarter, the first half is going to be soft, second half is going to be better. For the year, give us a rough range in terms of growth. What are you looking at?
Absolutely. First of all, thanks for having me. So first of all, we are happy with the performance of the last quarter. It's in line with our expectations. We were able to hold on to our margins, which is very unusual these days, at 20% EBITDA and more than 17% EBIT. The top line was as expected. What we are seeing is, first of all, the deal closures have gone up. The pipeline continues to look robust. It's just that there are certain things that are still hanging up there. And hopefully, we've been talking about tariffs and the geopolitical issues and also the intensity of the competition among the OEMs in the car and the truck segments. That part needs to stabilize a little bit. And we believe that in another quarter or so, things will stabilize. Once they stabilize, we think we'll be able to start these engagements that we've been able to sort of seal over the last couple of quarters. So we do believe that H2 is going to be better than H1, especially towards the end of H2, we'll see growth coming back. So I can say about, and it's going to be our effort to hold on to the margins while we go through this kind of transition.
All right. So 21% margins or so is, is something that you can maintain is the takeaway that we're getting. But, if I look at the growth, as you're saying, second half will be good. But should we brace for a degrowth in quarter two as well?
We don't talk about quarter-on-quarter numbers. All I can say, given the uncertainty continues, while we continue to start new engagements, there are pressures on the other hand as well. So, given the uncertainty, it's hard to say at this point in time. However, given the actual closures and the pipeline, we feel much better about the H2 of this financial year.
Okay, so when you say much better, can you give some more color on that, Sachin, in terms of what clients are saying, your deal pipeline, size of deals, nature of deals, and the pricing of those deals as well, given that we are in this AI environment?
Absolutely. And, to us, what we've been bracing for the last couple of years is moving from being largely a services company to a solutions company. That's something that we started to do a couple of years ago. And now it's getting accelerated. What we have also done is we have created models that are AI infused for mobility, and we are applying those. And with those models, what happens is we take a broader view of a program and sort of cannibalize some of the stuff from our competitors and at times our own business. So that's the kind of transition that we are going through at this point in time. And we believe that this will continue. The name of the game is going to be solutions and products going forward. So we're reimagining our business in some sense. Hence, it's just going to take another couple of quarters for us to make that adjustment. In terms of the wins and the deal pipeline across the three geographies, I think we have had healthy closures from passenger car, trucks, as well as off-highway. Obviously, given our depth and breadth in passenger cars, the volume is much bigger there. But we are seeing some initial shoots, green shoots in trucks and off-highway as well. One thing I do want to say is there are three countries where we started to make investment. Sweden, where we opened an office recently, and there are a couple of large truck OEMs and one passenger car company. And we have started to focus on India for India and China for China. So we do hope that both India and China also contribute to our growth as we get towards the second half of this year.
We would have had a longer conversation, and we do hope we get the opportunity to speak with you mid-quarter once again. Just a busy day because of tariffs, you would understand. So thank you very much for joining us with your perspective on the business and the lay of the land.